But we're also going to uncover some hidden traps that caught a lot of investors off guard. Okay, so here's what we've got on tap. We're going to start with the big global picture and then check in on the market's pulse to see how it reacted. After that, we'll dive into some pretty wild corporate stories, dissect a tale of two IPOs, and then wrap it all up with what this means for your money. All right, let's kick things off on the world stage because there's been a really sudden and pretty major shift in sentiment that's kind of changed the entire vibe. Now, you see this and you think, okay, two world leaders being friendly, what's the big deal? Well, the big deal is what was being said just a couple of weeks back. It was a completely different story. I mean, talk about a complete 180. We went from threats of massive sanctions and calling India a dead economy to all of a sudden everyone's best friends with positive and forward-looking trade talks. This sudden change of heart has just wiped away a huge cloud of uncertainty that was really hanging over the market. And this isn't just an isolated thing with India. It hints at a much broader strategy to calm things down and stabilize global trade, which is exactly the kind of good news nervous markets have been craving. So, you're probably wondering, did all this positive talk actually move the needle? Let's check the market's pulse and see how it all translated into the actual numbers. You could almost hear the markets breathe a collective sigh of relief. The big indices like the Sensex and Nifty closed up, firmly in the green. It was some much-needed good news for investors who've been feeling pretty frustrated lately. Okay, but here's the million-dollar question, right? After weeks and weeks of foreign institutions just dumping stocks, is the foreign money finally coming back? And, well, we're seeing a little glimmer of hope. It's not a floodgate opening, but for the first time in a while, FIIs have actually been net buyers in 2 of the last 3 sessions. It's a small sign, but a hopeful one, that maybe the worst of the selling pressure is over. But hey, let's not pop the champagne just yet. Everything is hanging on this week's U.S. Fed meeting. Right now, the market is betting on a quarter-point rate cut. If we get that, it's business as usual. But if we get more, that could be rocket fuel. Anything less, though? Oof, watch out. That fragile optimism could disappear in a flash. All right, so while the big picture looked kind of rosy, if you peel back the layers, there was some serious drama happening with individual companies. It was definitely not good news across the board. And this one, wow, this was a bombshell. Dreamfolks, the company that basically is airport lounge access. I mean, they have a 90% market share, just announced they're shutting down their entire domestic business. Just poof, gone. And this didn't just happen in a vacuum. It was like watching dominoes fall. First, the Adani Group decides to manage its own lounges. Then, the big banks, the ones whose credit cards get you in the door, they start pulling out, one after another. The whole business model just crumbled. And this, my friends, is the absolute classic retail investor trap. Check this out. Who was selling as the ship was sinking? The big institutions, the smart money. Their holdings went from double digits to almost nothing. And who was buying? Retail investors, who saw a falling stock and thought it was a bargain. Their ownership literally jumped from 12% to 30%. It's a brutal lesson. And the drama didn't stop there. Over at Vedanta, their big demerger plan just hit a massive brick wall. And that brick wall is the government. Yeah, the government is not happy. They've laid out 4 huge problems, from concerns that one of the new companies could go bankrupt because of its debt, to allegations of misrepresenting assets, and even hiding huge legal disputes. The whole thing is on ice until a tribunal decides what to do. Okay, let's switch gears and talk about the IPO market, because we had a massive, hyped-up debut this week that got everyone talking. Urban Company, the home services app. They absolutely crushed it on listing day. The stock exploded, handing investors a nearly 60% gain right out of the gate. A monster debut. Looks amazing on the surface, right? But hold on a second. How does a company that's been losing money suddenly pull a 240 crore profit out of a hat, just in time for its IPO? Makes you wonder. And this is where you have to read the fine print. That massive profit, it wasn't from selling more services. Nope. The lion's share of it was basically just an accounting entry, a non-cash deferred tax asset. It's paper profit, not real cash from the business. And that's a huge red flag, especially when the stock is already trading at a sky-high valuation. So, after all that, the global news, the company drama, the IPO hype, what does it all mean for you and your money? Let's connect the dots. Look, when you see the market taking off, the FOMO is real. It's so tempting to throw every spare penny you have at it. But please, hear me on this. Do not touch your emergency fund. Do not use money you've set aside for school fees or a down payment. Chasing a rally with money you can't afford to lose is how people get wiped out. So, what should you do with that cash? Keep it safe. Instead of gambling it in a volatile market, look at things like high-yield fixed deposits. You can get way better returns than a standard savings account without all the heart attack-inducing risk. It's just a smarter home for your safety net.